All right, folks, you win some, you lose some. It is a crazy day. We have so many stocks that are in the red and then some that are starting to turn around here. Specifically in this video, I want to talk about three stocks. Number one is going to be Pfizer. The turnaround story looks like it's alive. It looks like the stock is going to start heading into what I consider a growth phase once again, building out that pipeline, very cyclical type of business. Number two is going to be Sbux, and number three is going to be CVS. I want to start with CVS first, so let's get into it. Now, I want to reiterate that I have a ideal price target on CVS sitting around $57, $58 a share. And here's where discipline comes into investing. I reached on CVS, as you guys know, a little bit above, I think it was $68, $69 a share. So I'm down pretty big as it's one of my largest holdings. But I did say that if it broke below $57, that I would most likely be firing a pretty big bullet here. So am I going to fire that bullet? Let's go through kind of what's going on with CVS. So I read this quick article, and obviously CVS lost one of its largest customers, but not only did it lose one of its largest customers, the positive I want to take out of this, because there's definitely negatives here. First and foremost, let's talk about management not giving us the heads up that it's going to be a rough earnings, and that's how you get this 20% decline on companies, because the management doesn't let you know anything. And Pfizer did this to us a few quarters ago, where they basically kitchen sink their whole earnings report, and it was just pretty disgusting. But what I want to point out is CVS still maintained growth on their revenue of over 3.7% year over year. Now, before we get into the bad stuff, let's talk about the good stuff here. How many companies are actually pushing $90 billion of revenue a quarter? And what's fascinating about this $90 billion is a lot of it is recurring revenue. The fact that they lost one of their largest customers and the fact that they still grew year over year 3.7% when this is a company pushing over $350 billion of annual revenue, I honestly think this is pretty powerful stuff. Now, here's where the news gets pretty bleak. They were projected to do right around $8.30 for annualized earnings on adjusted basis, which now is bumped down to $7. This is obviously pretty bad to see EPS decline this catastrophic, but there is a lot of headwinds dealing with these healthcare providers, and CVS is obviously susceptible to it just like everybody else. They're guiding for $10.5 billion in free cash flow when they were originally guiding for $12 billion of free cash flow. Okay. So to me, this is a pretty substantial decline. But once again, how many companies out there are pushing $90 billion a quarter in top line revenue and pushing $10 billion of free cash flow, getting EPS right around $7 to $8 a share? So there's still strong fundamentals here within the company that I do want to highlight here. Now, with that being said, it has been a disgusting day for CVS, absolutely falling off of a cliff, hitting a low of just around 53 and change, I believe, was the low intraday. And so when we look at where the price is and we look at where my ideal price is, if I was patient, I'd probably be loading up right now, but instead I'm going to have a worser average because of it. But let's kind of like replug in these numbers here really quick. What I want to focus on is my 2024 projections for CVS was to do about $10.3 billion in free cash flow. So I am right in line here with what expectations are of $10.5 billion. So to me, the company is still kind of hitting exactly what I expected them to hit. Now, earnings are coming down, but that free cash flow is basically in line what I projected it to be. And I did this analysis a couple years ago. Also, top line revenue is growing at 3.75%, and you guys can see here I have it growing right around 3.5%. The company's basically doing what my expectations were for them to do, and if I was patient, I would be getting fills right now instead of reaching on the stock. So now that the company is trading below $56 a share, yes, this is a very appealing price. Do I think it can go into the 40s with all the bad news and everything happening? It's a possibility. And that's where I want to kind of sit back here. I'm slowly averaging in the low 50s. I got some fills. I'm trying to get some fills in $53, $54 range, but I'm really saving a big bullet for $49 a share if it breaks into the 40s somehow. Now the question becomes, do you trust management? Because this is where, when we look at all the numbers, we see that CVS is a cheap stock on many different levels here. But the question's going to be coming, do we trust management to execute? There's so many levers that this company can pull to actually become way more efficient, bring it down to free cash flow so that they can raise premiums, they could close down inefficient stores, So there's a lot of avenues, a lot of things that this company can kind of finagle here to fix the problems that are going on. But do you trust management to execute here? And it's been an ugly downtrend on this stock. But they're saying that they have enough levers to pull things back to a 4 to 5% profit margin. And that's where we're going to see that free cash flow really explode. So it comes down to, yes, I do think CVS is a buy at these levels, even with all the bad news. This is exactly where I expected them to be. The problem is that I reached on the stock, and that's something that I have to look in the mirror and realize that I did. So yes, to me, around that $55 to $57 mark is where I think fair value is. If it goes below this, I really think you're buying an incredible company with incredible opportunities, and you're probably going to get a very nice compounder in the portfolio. Of course, this is just my opinion. Next up is Starbucks, down 17% on the day. This is definitely a shock to a lot of people. Would I say that I'm completely shocked? Not really. I thought it was a little expensive. I think around that $65 mark makes a lot of sense for. I think that $65 mark makes a lot of sense for Starbucks. I did have my wife pick up some shares around $72, $73, or had my wife pick up some shares around $73 because she loves the company. But we started talking about the margins being a problem, the consumer possibly shifting, and I did a video on that, so I'll leave that above. Make sure you take a look at that and kind of go over some of the things that were my concerns, but I do think this is a possible opportunity. And so you guys can see here that, it's definitely a stock picker's market, and reaching and kind of not paying attention to rules can absolutely punish you. And I absolutely got punished on CVS. But when you look at where the stock is trading, this company does a lot of revenue. A lot of it comes down to free cash flow. They have a tremendous amount of levers to pull. And to me, I do think that it's in a buy zone right now. And I should have waited for it to kind of hit these types of levels, because as you can see by my models are all in line, and it was looking like it's closer to possibly a $56, $57 stock if I was patient. With Starbucks, definitely to me, I would probably wait to see if it breaks 70 and you can get some in the 60s, because that high 50 to low 60 mark is ideally where I think it makes sense to buy Starbucks. We talked about the consumer shifting and that companies like Starbucks could have a problem. But now let's talk about the turnaround story, and that's going to be in Pfizer. For Pfizer, we had a $24 ideal price target. I said anywhere between that $20 to $25 mark for Pfizer, I think is an opportunity, because this is a multi-year low. And what we have to look at with Pfizer is that this is not kind of your set it and forget it type of stock. You have to really be paying attention to the valuations of these companies, what they're acquiring, what's going in their pipeline, how much is coming down to free cash flow, how they're handling their debt. And this one was starting to get a little scary, but it looks like they're starting to get things on the right track here. Now, this was a company doing $100 billion of revenue during COVID, which got completely slashed in half. But now they're guiding for right around $58 to $61 billion of revenue and getting a EPS somewhere around $2.15 to $2.35, which means it's basically trading at 15 times forward earnings, which is historically cheap for this company. And when you guys take a look at kind of what I projected out for this year, 2024, $59.1 billion is what $59.1 billion is kind of what I was projecting out here. And when we look at, I do think they're going to accelerate growth in 2026 and beyond with all the acquisitions that this company's had. And I do think they'll eventually grow out their revenue to be close to $75 to $80 billion of top line revenue. And with that earnings beat, we do see Pfizer trading close to 7% on the day. And just like the negative story with CVS, analysts downgrading, I'm sure we're going to see analysts upgrading this stock. And so I do think that this has some more legs behind it. Maybe it gets closer to $30, $31 a share. But this has been a pretty ugly story, one we've been monitoring for a long period of time. And I do think that the turnaround story is now in play for Pfizer, bearing any sort of catastrophic thing taking place here. So I think everything that we've talked about, a big part of it is patience, understanding valuations, and really honing in on the discipline aspect of waiting for your opportunities to really strike when the iron's hot. And, if I was more patient, I would have been able to accumulate more shares for a lesser amount, especially on a company like CVS. Same could be said for Pfizer. Reached on Pfizer a little bit, but it ended up hitting that $25, $26 mark anyway. So in the end, I think staying true to valuation, paying attention to what's going on. And I do think for all three of these stocks, they are definitely in buy zone territories here. Even with the Pfizer move, I'd probably wait for little bit of a pullback here, try to get it back into $25, $26 range. With CVS, I do think anything below $56 is kind of a gift. Could be wrong. Management could still have problems executing. But of course, this is all my opinion, and we'll see you in the next one.